So, the topic of change of characters and breaker structures is something that you see a lot in smart money concepts, especially when you're learning online, whether it's from YouTube, Instagram, or anything like that, or any other sources. This term of change of character has been used quite a lot recently. When I first initially started to make the course, especially last year, you'd see in that first revision, nothing was mentioned about change of character. It's because it's something that we start to see a bit more often. So I want to explain that in a lot more detail and really break it down for you guys as simply as possible. But yeah, just the key to confirmations. So just to quickly understand what these terms mean, what these term means. So breaker structure is that continuation of structure in the current direction. Now, previously, we talked about breaker structure as pretty much the new change of character, what we've got now. But if we're sticking to what is known, within smart money concepts and what everyone sticks to nowadays, a breaker structure is, first of all, we were in this downtrend, right? Downtrend, downtrend in. A breaker structure is every single time we break downwards, following this structure downwards, that new low is going to be that breaker structure. Um, if I really had to name this a certain name and come up with something, I would name this a continuation of structure. That would make a lot more sense. But that's how it is, and we just call it a breaker structure. To be honest, the naming of everything is really not that important. It's just, do you have the understanding of it? And that's going to be what's important. Then the change of character, or CHoCH, as we name it for short, is going to be that change of direction once structure has flipped. So in that last lesson, we talked about primary structural points, right? And once that's broken, that's what we start to call a change of character. Then as we start to break upwards, what we're going to get is a breaker structure as we continue upwards. So it's as simple as that. And these are the terms that we're going to be sticking to. So the change of character is that change of direction once structure has been flipped. So as you can see, the primary high that we did have over here, once we've broken past that, we are now looking to have breaker structures upwards. So let me just annotate this really quickly as well. This area right here, just do it white. This area right here, once we break past that as well, now we can start to look for another continuation trade. So you see, once we broke past this high over here, that gave us our change of character. Then once we break past this point right here, so let's just say, for example, we took an entry over here, whatever it could be. We're not talking about entries at the moment. Once we break past that, this is going to be considered the new break of structure upwards. So now we can safely assume that we've now changed market structure. Yes. Okay. So the main lesson here, when we start to look for change of characters or any kind of breaker structure, we really need to look into price action further. Now, this is exactly the criteria that we're going to be looking at. Now, what we want to be looking for is a full body closure above a zone or primary structural high or low. What we don't want to look for is a wick closure around this zone. And we're going to be talking about that in the next few slides. I've got a few examples to look at. But this means the body of the candle closes below the high. So it doesn't exceed it. So just to show you what we don't want to see this. Now we've identified over here on the left-hand side, we've got that primary high that we're looking at. We've now reached a demand zone. So again, let me just get my handy annotation tools. You're going to be seeing this a lot around the time. This is pretty much the way that I love to teach, especially when I get on calls with certain students. It's the way I do it all the time. But this is our primary high right here. We've now reached our demand zone. So let's just call it the D zone, demand zone. So we're looking to buy up. Now, if we wanted to confirm this, what we could do is wait for that change of character above this area right here. But the problem with what we saw is this. If we really line it up, none of the bodies of these candles right here exceeded that high. So as you can see, exceeded just below. It went just below. And then from that, as you can see, the outcome of it, price did not even respect our demand zone. And this is pretty much because we didn't even see that official change of character. Some people might say, oh, look, it just flipped up above it. Now we can start looking for buys. Let's just say over here. But that would be incorrect because we haven't got that body closure. Then, in terms of this point over here, what we do want to see, we've got another example right here. So we do have buy side liquidity at the top over here. We do have a primary high right here. And then our demand zone of what we're looking to buy from would be right here. So we've now reached, prices reached the demand zone. We're now looking for a confirmation to the upside. So as you can see, price, even with the first aggressive candle, has actually closed above it. The second candle closed above it as well. And then now we're starting to get that retracement and now looking for buys. This is exactly what we want to look for. And, you know, just showing through the examples right there, you can start to see. Now, one question I know that you all have, because I even had this in the beginning of my journey as well. What time frame do I then use? Because if you really think about it, any time frame that you go on to, you know, lower and lower time frames, you're going to see the candles sort of close above, or the bodies close above at some point on the lower time frame. Now, my answer to this, it all depends on the situation. If you wanted to get a confirmation trade at a 1 hour point of interest, it would not make sense to look for a 1 minute candle closure. You really do have to be realistic with it. The higher the time frame of the candle, the more effective the body closure. So, like I said, if this is a 1 hour chart, we do see that 1 hour body closure above the primary high. That's exactly what we're going to be looking for. You know, to see a 1 hour closure is very, very good. If we see something like a 5 minute closure above, I wouldn't consider that as a proper change of character. But yeah, I hope that all makes sense. That's pretty much the logic that I do take whenever it comes to all of this. You're going to realize when you do get into the charts, it's going to save you a lot of times. You know, this is going to be a key concept that we do use in all of our analysis. But yeah, guys, that's pretty much it for this video, and I'll see you all in the next one.